I did read from my handy dandy, very trusty Benzinga Pro platform that they got out from under this SEC probe. They're paying a $45 million settlement.
Yep.
So they're all fine and dandy. And then it moved up again. But I wonder what the short interest is there, because earnings are coming on the 12th of February, I think. What do you have?
Yeah, I've got you here on all of that. The short interest here on Hood as of the last report, which came January 10th, that is a fresh report, 2.07% of the float shorted with 1 day to cover. So there is some short interest in there, but it's
not a lot. Okay.
Fairly small. Now, the earnings question that you had, they are confirmed for aftermarket on February 12th. So we are just about a month away on earnings for Robinhood.
Right. So my suspicion is they're going to give a fair bit of that back, especially if we take a look at what the weekly chart is doing. It's very, very range bound. So my thought is that we might have ourselves a cheap put butterfly. So let's take a peek at where the traders are sitting for February. We are coming up on the three most volatile OPEXs of the year: January, February, and March. And that could really give us outsized moves. And so if we anticipate that Hood is sitting at the top of its range here, and we say to ourselves, what if I want to take a trade before earnings? So we'd look at February 14th as our expiry and see if we can find ourselves, the pricing is not too bad. If we can go, let's see.
I will say that is tough to see. I don't know if we've
adjusted. Yes, I always forget.
Very tough to see.
Dang it.
I was going to say, Thinkorswim, not friendly to sharing on screen. There are other, they're just not. It's just everything is so small. It is what it is, though.
I'll do extra large. Kaboom. Oh, yes, we are really going to make tracks now. Okay, so in the weekly formation, we've got a range that is about $7 wide, right? Could be a little smaller, could be a little bigger. So what we want to look at is something that sort of gets us right at this, maybe this 40 line into 36 potentially. So let's see what 40 to 35 gives us. This should be 40, 35, and then 30. It's a little bit expensive if you're just trading for the fade. Let's see. Oh, more expensive. Let's look at the 31st, or maybe the first week after expiry. Okay, so let's anticipate that we're going to see sort of a shock reversal. And so what I did was I only gave this trade 10 days to work. $62. $500 upside total, less the $62 and what you might expect for a little bit of volatility. I would say put your stop at maybe 50 or 60% and see if this thing actually comes back into the midline, because I think it should. And the reason for that is I suspect when we see a savage move like this, to me, it always is short covering. Not always.
Is that why you were asking about the short interest?
Yes.
Yeah, I gotcha.
I wanted to see if there was a ton more that could boost it higher. And if there's only 1 day to cover, no, I don't think so. So my thought is it'll come back, fill the gap, come into maybe 39 or so, which should give this trade a potential doubling. So what you could do, because there's enough volume, I think, to choke around in here, if you want to set it in the queue for 40 cents, see if you can get it. If it goes, great. Okay. If it doesn't, no harm, no foul.
Okay. I like that. I like that patient approach too, right?
Yes.
Put out a decent order there and make it work for you, lower your risk. Okay. I like that. I like that there on Hood.